Let's take a look at some information and charts on Bitcoin for BraveNewCoin. Bitcoin is a proof of work chain with a 10-minute targeting for blocks. Currently has a sub 2% inflation level, recovering from the massive Chinese mining upheaval as we're looking at hash rate and difficulty here. Hash rate fell with price, but it also fell with the Chinese miner exodus, currently reallocating that to Texas and many other countries around the world, but a lot of it is reallocating to the United States, which could be good, could be bad. You don't really want to see reallocation, centralization anywhere. We're just setting ourselves up for another China situation if all of the hash rate is in Texas all of a sudden, because eventually that's just going to lead to another regulator going after Chinese mining in some way, albeit locally in Texas, not necessarily in the United States, but you don't want to have those risks and centralizations anywhere in the world. Nevertheless, hash rate rebounded quite nicely and is continuing to rebound here. Difficulty continuing to rebound, estimated 3% positive in the next 5 days. Since the string of negatives, it has just been straight positive, adding, more. And we're seeing more miners come online, more new miners get released. So I don't think that's going to end anytime soon. These have varying degrees of profitability at 4 cents per kilowatt hour, but they will likely still be deployed to the network anyway. Something else that's interesting is if we look at the CME Bitcoin futures positions, as hash rate topped and as Powell multiple sort of topped in April, these short positions came off. So these are likely hedging positions, not net short positions. Okay, so to see shorts growing currently gives me bullish sentiment for the near-term future within the next quarter. It might not be one-to-one completely, but I think rising short positions is actually bullish and ties quite closely to mining. Something else that's tied closely to mining is global nodes. These are either mining nodes or full nodes, but there are currently over 11,000 worldwide, most of which in the United States and Germany, but you can see the global distribution here is quite vast. New Zealand, Australia, Japan, China, Indonesia, South America, South Africa, Russia, right? Greenland, Iceland, whatever. It's all over the place, which is good. Hawaii popping up on there. Exactly what you want to see for a high degree of centralization. Global distribution of the ledger. Looking at the Powell multiple from Check on Chain, the idea of this one is when are miners in most profit, when are miners in least profit? How does that look versus price? Is there a signal here? And in general, when the miners are in the most profit at a multiple of 10, basically any multiple above 8 is screaming overbought. But on backtesting, this is lined up with every single all-time high we've ever made. Currently, it's zeroed out. It's basically a 1. A lot of this stuff that I'm going to show is zeroed out, which to me says we're at a great place for a pending bullish continuation run in Q4. We're not bearish. We're not crazy bullish. We are neutral as neutral can be, which is exactly what you want to be into a bull run. So plenty of room for upside on the Powell multiple. In that regard, this is probably the single most important fundamental chart that I watch is the Bitcoin hodl waves. This measures the percentage of the network that's moved in a specific period of time. Currently, we're at the lowest level of 6-month coin activity or less in quite some time. And we're kind of approaching November 2018 lows of 30% or less of the network that's moved in the past 3 to 6 or 6 months or less. It's kind of confusing, but when you think about it, it's pretty straightforward. And what this really means is there's not a lot of new coins moving around. There's not a ton of activity here. This has peaked, again, much like the Powell multiple, this has peaked at all-time highs because when prices go up, more people tend to sell. As prices go higher, more hodlers unhodl, just as they did in March, April. More hodlers unhodl, those old coins become new coins again. They get sent to exchanges, they get sold. So anything above 40 as a total is a worrisome sign, and anything approaching 60% is probably a multi-year all-time high top. So if we have a run in Q4 and beyond, this thing is absolutely a must-watch for me because it basically shows when supply overtakes demand in my eyes. If we look at transaction counts, they've continued to decline over time recently, over the past few months, rising in the past few weeks. Part of this is mining related. Part of this is just general inactivity on the chain. Transaction values are at an all-time high for some reason. on average. I don't know why. This could be an error in the data, but I don't recall seeing a ton of high value transactions floating around over the past few days. But you'll see spikes like this in transaction sizes when transaction counts are at a relatively low level. The mempool, which is pending transactions, total fees pending in the mempool are kind of non-existent relative to where they could be. And down the line, this is definitely going to be an issue. If fees are too cheap relative to total transactions, then there is no subsidy for security once the block reward disappears. This will get more discussion as we approach 2160 or whatever it is when the block reward disappears eventually. But there's very little pending activity in the mempool right now. And part of the reasons why transactions are so cheap is because of SegWit, which is good. People want cheap transactions. But there's definitely a Goldilocks principle here where you need to scale, you need to stay cheap when things pick up on chain. But when on-chain activity is extremely low, like it has been, you still need that block reward subsidy. So you almost need a dynamic block size, or at least a semi-dynamic block size, to target a certain level of chain security. We'll see if that picks up more traction over time. But overall, total SegWit as a percentage of the network is at 82% right now. And as stuff like Lightning picks up, on-chain activity for transaction counts is probably going to continue to decline. NVT, a measure of inverse on-chain activity to market cap here, has continued to rise. And again, this is another troublesome trend if you're not thinking about what else is going on with the chain. So this doesn't measure Lightning stuff. This doesn't measure other scaling initiatives potentially. So I've soured on NVT more and more these days. It needs to be retooled in my mind because it just doesn't really tell you much. Active addresses fell dramatically from over 1 million to under 800,000 and are rising again. So we are at levels never seen in BTC as far as active addresses, aside from 2017 euphoria and late 2020, early 2021. So despite being down significantly, we're still up massively over Bitcoin's history. So if I'm bullish on this into Q4, I want to see active addresses pick up. I want to see transaction counts pick up. I want to see on-chain activity continue to increase. Here's MVRV, which is, in my eyes, a better measure of market cap versus on-chain activity. As a multiple across most coins, anything above 2 is generally a massively overbought signal. So when the market cap is 2 times the on-chain activity, generally tells you speculation is just crazy taking over what's going on chain. In 2013, this hit 5 twice. In 2017, it hit 3.5, and most recently it hit 3. Currently, it's at 1.7. So for me, this is another really important chart to watch. If price creeps up to 80K, 100K, 150K, what does this look like? How overheated can we get on MVRV? My guess is anything close to 3, and that's going to be a top for a good while. Anything past 3, and that means we're hitting crazy euphoria on chain relative to price. Looking at Bitcoin Google trends, they've basically zeroed out back down to the previous sort of baseline 2018, 2020 levels. All of the search activity, search interest has died down, which again to me is a good thing. If we're actually going to be bullish in Q4, wash away the euphoria, wash away retail interest, let everybody forget about this thing, and then it can start making moves towards all-time highs again. And when you see that, you'll probably see Google Trends turn the corner. And if BTC goes to 100, 200K, you're definitely going to see a new all-time high in Google Trends. That's my biggest call of the video. Flipping gears to technicals, along with the hodl wave, this is probably my most important technical chart in that gives me potential upside for the quarter. So this is a pitchfork. You pick 3 points, you get a rate of change. The midline is where price wants to always return to. And the outer bands are very similar to an oscillator, overbought, oversold. And it gives you a time component to price targets. So can this thing shoot past 170, 180, 200? Of course it can. But based on the rate of change since 2019, it's had trouble. It's struggled exceeding the top band here. So if this peaks into the purple band in Q4, I mean, that is a massive sell signal. Massive, massive, massive sell signal. Euphoria, be careful. We are way above the rate of change. Seriously consider rotating into something else or cash, right? Now, let's say I'm wrong, and let's say we dump to wherever. 20K is where we're probably seeing max pain based on that band. But if we stay on the top side of the midline into Q4, I definitely like all-time highs, including past six figures, 110, 120, 140, 170, certainly on the table. Daily cloud is also bullish already, which is a good sign. We've gone from fully bull to fully bear to fully bull once again. The most troublesome thing about this chart is the TK disequilibrium still. So the Kijun is still down here, meaning the 50% retracement is still on the table as a mean reversion level. But ultimately, if this thing can hold above 45 into October, I think we're free and clear. I think we're good to go. And what you want to see is the TK lines get closer and closer together, tighter and tighter and tighter. That's the cloud's way of telling you trend momentum has zeroed out. We're still on the momentum from the reversal. So we had bull trend, reversal, mini bear trend, reversal, and now we're just now starting this bull trend, which is again another way for me to see and show that this has lots of upside left in it. Even if this stalls at like 60, 66, we'll be able to see that on the cloud most likely with a bearish TK cross in Q4. Here's Pi Cycle Top, something else that people look at because historically it's done a pretty good job at picking highs relative to the crosses. And we did get a cross in the most previous run up, the recent local high. Currently you can see how far apart they're spread, and you can see how slow this moves over time. If price moves slow, I mean, this even 2016, 2017 was a crazy run, but it still moved relatively slow to this most recent run in 2020. So what's always preferred is a multi-quarter, multi-month trend, because then the averages are slow. People don't get crazy greedy with FOMO and taking profit. Allows this thing to run nicely over time. The Pi Cycle Top is one way to visualize how crazy are we with the current trend in the bullish direction. So we got plenty of room on that. And then another really good trend analysis indicator for tops and bottoms is the MA multiplier, very similar to the Pi Cycle Top indicator, but this will give you the bottom. And this is the 2-year, so 365 times 2 because it's on the 2-day. Buy zones are in the green, sell zones are in the red. Currently the sell zone is anything above 120. We've never really fell below this midline post bull trend and then recaptured it to all-time highs again. So this will be a first. We'll see if that's doable. But if we break the midline, I think that's a really good sign that we're going to attempt a touch of the other edge of the band. And then this is how it looks on the yearly MA multiplier, which is on backtesting slightly better at picking like the exact top kind of to the day rather than giving you a range to dollar cost average out. This sort of gives you this was the top, this was the top, this was the top, right? So between the two, you can say your zone of selling, DCAing out, is between 117 and 192. Currently, that's going to move up over time, probably into the 200K range, is my guess. We're talking in peak max euphoria, double bubble, all happening in Q4. This may extend into Q1, but I doubt it because of seasonality, tax purposes. I mean, a run from here to 200K would be a 4x, which would be absolutely insane, right? If this then that, we'll see what happens when it happens, but these are the targets I'm looking for, potentially in Q4. Using some vanilla 5200 EMAs, we're still bullish. We crisscrossed here, which is a good sign. Yearly pivots give you a top of basically 100K, which is a 2x from here, completely reasonable. VPVR isn't too much health, not a lot of volume here relative to sub 10K, but there is a decent chunk of support now between 31 and 37. There's a yearly pivot there. The 200-day moving average is at 40. So anything close to 40 in the next 15 days for me is totally fine. Just keep zeroing out those momentum indicators, those oscillators. That's exactly what you want to see. That's why we had this crazy run in 2020. We spent kind of a year plus just doing nothing, right? Just ranging sideways, chopping around. EMAs crisscross several times. The oscillators are back and forth all over the place. Currently RSI is just above 50, so plenty of upside. One thing to watch for as well in Q4 is this waxing and waning characteristic of RSI, this convexity, concavity. You see this over and over again in multi-month trends where we'll start to peak up on RSI, and then as we hit those highs, RSI gets lower and lower and lower. It's another way of just saying we're putting in successive bearish divergences, but definitely something to watch for in Q4. And then using the daily alligator fractal stuff, we're crisscrossing here as well. So even low time frame, MAs have gone from fully bearish to fully bullish and are resetting that momentum again with the trend here. And for something like this, I actually like the weekly, probably the best for the alligator fractal stuff, because on back testing, it's just been super clean, telling you, okay, it's time to get bullish in May 2020. And it doesn't guarantee upside, right? It just says time to get bullish again, right? This may crisscross again, may have crisscrossed again in May, some other parallel universe. It didn't in this one on this timeline. And we stayed above the MAs, we stayed bullish. MAs stayed and held that bullish cross. And you got successive entries above fractals here with a trailing stop loss. And the trailing stop loss from sub 10K to above 30K never even made a fractal, right? This entire time I told you, hold, 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 don't stop, don't think about stop holding, hodl, 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 whatever. Then you get a stop loss here at 48, I think it was. Then you get a stop loss break here and then you're out. So plenty of really good trailing stops on backtesting, trend determination on backtesting. Currently it's bullish. There's no trailing stop or bullish entry, but my guess is you're going to get a stop around 40 and you're going to get a bullish re-entry around 52.5. Lastly, let me just mention the ETH-BTC fund and DeFi portfolio I trade for TechMe Capital on Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance, allocations, trades, and vaults and things that I'm sitting in the tabs below. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.